Okay, what I'm going to do today is to provide a background for global economic developments for the last several years and the future prospects for economic growth or recovery, and also the financial stability of the global world economy. And so I will begin with some facts you may not be familiar with. But first of all, the global economy, including many of the advanced and the developing economies, have suffered from the recession, slow growth, low employment for more than 5 years, and in fact almost 7 years, beginning from 1997 onwards. Now, after 5 or 7 years, we begin to see some signs of economic recovery, which means that the economies of advanced countries as well as developing economies are now have resumed to grow faster than before. We see some signs, and much of the recovery has taken place surprisingly this time, unlike the experiences we had in the past. Surprisingly, this time the recovery has begun in advanced economies, United States, Europe, European Union, and even in Japan. We see some signs of economic recovery, whereas in emerging market economies, developing economies, they are still struggling with slow growth and low employment, and they have not been able to resume their economic expansion. This is the major difference. Usually before, when the world economy recovers, then the recovery of both of the advanced countries as well as developing economies started simultaneously together, but now this time there seems to be some sort of dichotomy, the differences between the economic performance. And even China has known for rapid growth for the last 20 years or so, almost always growing by something like more than 8 to 9%. But then China's growth rate has come down substantially to around 7% plus few percentage points, few points. And more discouragingly, their future prospects are not as promising as we expected before. In fact, it's not clear whether China will be able to grow as fast as it has in the past. And if you look at some of the emerging economies elsewhere, like Mexico, Brazil, Argentina, and most of these ASEAN member states, you know who they are, ASEAN member states, they're not doing as well as they should be. They are still classified as emerging economies, but somehow they're no longer emerging. In fact, in some cases, as in the case of Indonesia, they are submerging again below the surface of the water. So that we are concerned about this disparity in economic performance and economic growth between advanced economies on the one hand and developing economies on the other. This is one fact. And the second thing is that, second development, which is equally disturbing, is that the most of the emerging economies now suffering from the phenomenon known as financial spillovers. That is, the financial spillovers from advanced countries into emerging economies. Namely that for the last 5 years or so, lots of money has flown into to these emerging economies. Indonesia, Thailand, Malaysia, Brazil, Argentina, and Turkey, and all these countries have received large amount of money coming into the country from advanced economies in Europe and United States because of large amount of money printed by these economies, United States and the European Union. And you may have heard about the quantitative easing. Quantitative easing means that, simple word, they're printing the money, printing the process. Now suddenly, because of the recovery in the United States and elsewhere, the money is again suddenly flowing out of these emerging economies from Indonesia, in Asia, for instance, Indonesia, Malaysia, and Thailand. Suddenly they are losing lots of money as foreign investors and foreign lenders who brought money into the country in the first place are now taking money back to the United States. In the process, suddenly these countries are now experiencing the shortage of money they can use for their consumption and investment. This is the second problem that is complicating their economic problem. And if you look at, I have prepared a number of the charts, and here we have the GDP growth rate. This is a quarterly data, GDP, by which I hope you know that GDP is a gross domestic product, a measure of the level of economic level of output produced by the economy, and the rate of change of the GDP growth rate. If you look at this, the blue and red line, you see that recently that the rate of growth has started moving up, which is taken as a very important sign of recovery. In other words, the economy has started producing more goods and services, employing more people than before. And that is what's taking place in the United States and Europe, and also in Japan. I hope I have tables here. I think I'll have tables somewhere, but then this is what is happening. But if you look at China, again, you see, well, you don't see much of improvement here in China. We expected that the recovery of China would be much faster, much more extensive, much more comprehensive, but then that's not what we expect as compared to what is taking place in the United States and European Union, Europe. And if you look at Korea, for instance, well, again, you see some signs of recovery in this country as well. Economic growth has started moving upward, but then the strength of recovery is not as strong as was expected. So that it's still unclear whether Korea will be able to match the performance of advanced countries in terms of the economic growth. But then Korea is somewhere in between. And then I don't have charts here, but then if I draw similar the changes in the GDP growth rate for other emerging economies, you don't see any upward movement at all. And you see upward movements in the United States and European Union, but then you don't see similar movements at all. But then in Japan, we see again, because as a result of this new economic policy, advanced by the new administration, the economy is doing a lot better. And what about employment, for instance? The average employment rate, in other words, the percentage of working the population, the average number of the people, a number of working age populations engaged in active productions of goods and services, ranges from 72% in Germany to 64% and 63.8% in Korea, and France is about the same. In other words, that there are a great deal of variations. In other words, that in countries like the Canada and Germany, employment rate is very high, it's above 70%. It's 70% of working age population does have job, whereas in countries like France and Korea, surprisingly, well, still almost 35% people are looking for jobs or have given up the idea of finding jobs, or have taken themselves out of the job market. And this is, again, shows that there are differences in the employment picture, and which suggests that different patterns of economic recovery in terms of the employment. In other words, some countries, employment level is very high, in others very low. And then if you look at some of the countries in Europe, and these countries are the sources of the problems in Europe, and in fact, these countries have triggered Eurozone crisis you may have heard about. And these countries have shown very low employment rate. In the case of Greece, it's 55%, which means that 45% are not unemployed, don't have jobs. And they are all below 60%, Ireland, Italy, and Spain. So even in Europe, although as a whole, European economy as a whole is recovering, some of the countries are lagging behind. And then the average consumer prices. Here we have the indices, and the 2005 index is 100. And then in the case of, for instance, Canada, 2010-2012 average is 111.5, which means that over the period between 2005 and 2010 and 12, prices have risen by more than 10%. And in the case of Korea, it's almost 20%, the United Kingdom 19%, and so on and so forth. But here, the point to be made is that the case of Japan. In the case of Japan, prices have fallen, have declined. In other words, that Japan is suffering from what is known, the economic phenomenon known as deflation of the economy. Its prices are declining, and so that the over 7 years period, for instance, prices has gone down by almost 1 percentage point, and that's not a very good sign. But then now Japan is trying to increase rate of inflation by 2% every year. And then we have the consumer prices of other countries. And in Greece, again, Greece is suffering from high rate of inflation, at the same time, low rate of employment, as you can see in this diagram and in the figure. And then these charts may be of some interest because you belong to so-called younger working age populations and youth employment. In other words, that you are classified as those younger people looking for jobs, and from age 19 to 24, that bracket, the younger people belonging to that bracket are not very successful in finding jobs. For instance, in some of these countries, for instance, in France, 23% of the younger people are now unemployed. In Canada, 15%, and the United Kingdom, UK, surprisingly 20%. Korea is 9.5%, 16% as on the average for the OECD, the member countries. It's very high. Even in the case of Korea, is 9.5% because the overall employment rate is less than 4%, which means that the youth unemployment rate is twice as high as the overall unemployment rate. And so that everywhere in the world right now, whichever country you go, young people are having a hard time finding jobs, and this problem will continue for some time. Even after the economy has recovered, still many young people will be unemployed. So it is my warning to you that your chances of getting jobs in the future will not be as bright as they are now, which means that you'll have to work harder and excel and move ahead of other people. Otherwise, you may join the region of unemployed people. Am I making myself clear to you? Okay. Now, there is another amazing statistic. Look at the unemployment, youth unemployment rate in Greece, 44%. Half of the younger people are now unemployed. And Spain, 47%, but it's more than 50% nowadays. Just imagine how stable society is going to be if half of you will not be able to find the employment opportunities to work. How are you going to survive? And this is what we see in some of these advanced economies as well as in emerging economies. And the situation, as far as the youth employment is concerned, is not going to change very much for the next 5 years or so. Maybe a little bit down, a few percentage points down, but not major substantial improvement at all. So you better take my warning very seriously and work very hard. I don't want to see many of you unemployed, all right? Now, I move on to the second development in the global economy. That is, we have heard for many, many years decline of the United States as a hegemonic power. For many years, since the early 1970s, U.S. has suffered from low growth rate, high unemployment, and huge accumulation of international foreign debt. In other words, that many economists, they argue that the Americans were living beyond their means. They were borrowing so much money from Japan, China, other countries to finance their consumption and investment. In the process, they have accumulated. They borrowed lots of money, and at the same time, their growth rate has been very low, unemployment is very high, and even now, unemployment is very close to 7%. It's very high for a country like the United States. And furthermore, in 1997, the U.S. suffered a huge housing problem. Suddenly, housing bubble burst. That is, suddenly, beginning in 1997, housing market collapsed in 2007, by which I mean the prices of housing declined, plummeted suddenly by huge amount. And ever since, U.S. has been struggling to recover from this housing market decline, housing market collapse. And because of the housing market collapse, the constructors haven't been able to build new homes, new buildings, new real estate, the new commercial estate, and so on and so forth. So that housing industry, the construction industry, has been decimated by this, the bubble, the burst in 1997, and housing industry has been and continue to be very important component of the U.S. economy, which provides opportunities for a large number of job opportunities, as well at the same time contributing a great deal to the production of goods and services in the United States. So that still the United States is suffering from the after effects of the housing market collapse, by which I mean the housing prices suddenly fell by 50%, in some cases more than 50% in the West Coast, for instance. And then many people felt that, well, this was the final piece of evidence showing that United States decline has become reality, has become unavoidable economic development, and United States no longer economically and militarily, politically, no longer the hegemonic power, the status the United States has enjoyed for many years after the World War II. And so there was a vacuum of power in the global economy. If the United States is losing its influence, and then which countries are going to make up the vacuum? Who will be coming into the vacuum? Who will be replacing, to some extent, the role of the United States? This was the debate that was going on for some time, and this crisis of housing crisis, which really dealt severe blow to the United States, was regarded like the final, well, I wouldn't say final nail, driving a final nail on the coffin, but there was, as we moved, for the last several years, we begin to see, for a number of indicators suggest that we begin to see that resurgence of the United States as, again, not the hegemonic power, but then very influential, very important economic power. In other words, that has been able to recover some of the lost ground as a hegemonic power. That has become more evident for the last 2 or 3 years. And if you look at the GDP ranking in 2012, United States, as you can see here, the United States is still the largest economy in the world, the single largest economy. Look at this, the figures in terms of US dollars, billions. And the second largest economy is China. So now many people say we live in a G2 world that run by 2 important countries, namely United States and Japan, but that I will tell you is an exaggeration, and no longer that G2, the global, the power sharing is supported by the evidence, and no one is arguing that G2 status, G2, the arrangement is going to be very viable or sustainable. And then Japan and Germany and so on and so forth. And Korea is 15th largest economy in the world. It's not a small, the peanut anymore. It's a very large economy. It's almost the same as Mexico. It's in fact almost the size is just about the same. I'm showing this the GDP ranking, that how important U.S. economy still is as far as the amount of the goods and services they are able to produce. It's a very important, not the hegemonic countries to some extent. But then the world, as the decline of the U.S. has continued, the world has become a multipolar world. That is, no longer U.S. is no longer the most important power, but then its position has been challenged by the other economies, such as China and European countries, and even countries belonging to the emerging world, countries like the Russia, India, Russia, and Brazil. In other words, that they have now sharing power of managing global affairs together with the United States. Now the world has become a multipolar world as far as the distribution of international power, international influence are concerned. Well, that may be true, or then may not be the case. It's rather confusing. In fact, on top of the G2 countries like United States and China, which are the two largest economies, number one, number two, there are many, the communities consisting of a number of countries, economic communities or economic unions. In other words, that number of countries now work together to create a community where trade among the members is free and the flow of money is again relatively free, creating a community where there are no restrictions on bilateral transactions in trade and finance. And the largest one is NAFTA, that is the North American Free Trade Area, where the numbers are, the number is three. The countries are United States, Canada, and Mexico. It's a free trade area. It's very large free trade area, and it provides major the power base for the United States. There is no question about it. United States itself is very large, but then to the United States, the two other countries in North America added, so that NAFTA itself is a very large power base for the United States. But then there are other economic unions and communities, which I'm going to discuss: the EU, European Union, the ASEAN community, ASEAN +3, BRICS, and then one more that called RCEP, and I will discuss all of these economic unions. And they are created for a number of reasons, but then they've been trying to challenge the supremacy of United States in managing international economic and political affairs. In other words, that individually European unions may not be able to challenge the United States, but when 28 countries, European countries, they gather their economic forces to create a single community, then community can become very powerful, the factor in the global economy, in running the global affairs. And if you look at, for instance, some of these the unions, European Union, there are 28 member countries belonging to the European unions. Most of these European countries now members of the European Union, European Union, and population is 500 million plus. It's a large number of populations, and GDP amounts to 17.6 trillion, as large as the US GDP. It's very large economic union, so that if the European Union is a coherent entity, well, the union can be as powerful as the United States in managing trade issues as well as financial issues, or governing trade and global financial flows. In other words, the voice of the European Union would be as strong and as powerful as that of the United States, but the European Union is not such a coherent, well-unified economic entity. The members don't agree on many issues, and only the 17 of 28 members now have created the European monetary system, which created single currency called euro. In other words, the 17 countries, excluding important country like UK, they are using the same currency, euro. Whereas 11 countries have decided to leave outside of the Eurozone or the European monetary system, so that the decision-making process is very complicated, and most of the times it takes a long period of time to come to any kind of conclusions on domestic as well as international issues. So this is not a really well-organized economic union, although the union itself is very large and has played an important role. And up until 2011, many people thought that in fact European Union would be more important than the United States in the managing international trade and international financial matters and financial transactions. But then in 2011, that the Eurozone crisis broke out in Italy, and not in Italy, but in Greece. Greece practically went bankrupt. Although now Greece is surviving by the financial assistance given by the European Union, other union members, and the International Monetary Fund. It's almost a bankrupt country. And then similar problem occurred in other countries like Italy, Portugal, Spain, and in Ireland. So that all of these Eurozone members, which are also members of the European Union, have become a major source of international financial crisis. And the crisis still hasn't resolved, and it's not still clear how long it's going to take for these countries to resolve or recover from this Eurozone crisis. Although last few months have shown that these countries have been able to agree on how to resolve the bankruptcy problems of some of these members, like Greece and Portugal and Spain, so that we see some signs that they're able to manage this or resolve this crisis, but still it's going to take many years for them to recover from the Eurozone, the crisis. And there is also loosely organized the partnership area or the union or free trade area known as Regional Comprehensive Economic Partnership. It sounds very strange name, but it's embryo of some kind of economic union they're trying to construct. Now there are 16 members. There are 16 members. There are the 10 ASEAN members, ASEAN countries. The ASEAN is also a community, but ASEAN members, 10 ASEAN members, China, Japan, Korea, plus India, New Zealand, and Australia. The 16 countries have gathered to create a free trade area and create some sort of the region where these 16 countries can work together to construct stable and prosperous region. But then this RCEP, the membership partnership, hasn't made much progress because it was proposed only a few years ago. And the population is a huge population. It's 3 billion because the member includes China and India. You can imagine when you add China and India, then, well, that's it. I mean, they cover something like the almost 25% of the entire the global populations. And GDP size, again, it's very large because the partnership includes Japan and China, the second and third largest economy. So that is 17.2 billion. It's a large, the regional, the economic, the partnership. But then why they are trying to establish this kind of partnership or economic union? Well, they believe that the world has become a multipolar, multipolar structure, and then they're trying to occupy an important position in this multipolar world and try to create one polar, which is as important as that of the other polars, including the United States. And then there are the BRICS. The BRICS means that it's some sort of very loosely structured union among the Brazil, Russia, India, China, and South Africa. The members are 5, and the population numbers 3 billion, again, simply because we have two the large economies, India and China, and the GDP side is not that impressive. It's about 4 trillion. And many people expected that these 5 countries together would play a very important role in making important decisions at international financial institutions and at the United Nations. And there was many people felt and expected that they would emerge as an important, very powerful group with a great deal of influence running the United Nations and other international organizations. But then somehow they haven't met the expectations of many people. And in fact, the main reason is that the member countries couldn't agree among themselves on what they should be doing. And they could not have proposed, they could not establish any unified front agreeable by all 5 members at the United Nations and other international financial institutions. So that despite the military power, I mean, imagine that you have Russia, China, India, they're all nuclear powers. So that the many political scientists as well as economists believe that they would project a great deal of influence and power in managing global economic and political affairs, but that expectation has not materialized. And then there is one economic community in Latin America. Of course, there are smaller ones, many smaller ones elsewhere, but they are not important. But this one, there is only one important, the economic union or economic community in Latin America. It's known as Mercosur. Members are 6, Argentina, Brazil, Paraguay, Uruguay, Venezuela, and why I have only 5? One more. There should be the Paraguay, Uruguay, Venezuela, and there is one more. I forgot which one was, but it's not that important. You can make it up later on. The Paraguay, Uruguay, and Bolivia. I'm sorry, Bolivia. Yes, that is important. The soccer-playing countries. How could I miss that country? Bolivia is the member, and the population is about 275 million. There shouldn't be a dot there. 275 million, and the total size of the GDP is 3.5 trillion. And again, we expected that this organization, this regional organization, would emerge as a very powerful entity representing interest of Latin America at the global fora and global institutions. But then again, the squabbles among the members, just they couldn't agree on many things, on trade and financial matters, so that again, the Mercosur has not been as effective as it should have, simply because just different countries have different interests, and they haven't been able to resolve these differences to develop a unified position on many international economic and political issues. So there are many multipolars in the global economy, but then why these polars have not become as important as they should be or they were expected to be? Well, there are many reasons. One reason is that members were not able to harmonize their different backgrounds and different policies and different cultural traditions and different backgrounds in economics and politics. But there has been another important development, that is what is known as middle income trap. And in fact, this middle income trap phenomena has reduced importance of many of these, the regional arrangement or regional community or regional economic unions BRICS, RCEP, ASEAN community, and ASEAN plus 3, Mercosur, and all of these things, except for NAFTA and European Union. In other words, that except NAFTA and European Union, all other small polars became insignificant in our own important because of what is known as middle income trap. The middle income trap is an economic phenomenon where a country, after attaining a certain amount of per capita income, get stuck at that level. In other words, that after achieving a certain amount of income, they slid into a trap and never get out of it. And I will show you this, what is happening here. And if you look at this, the middle income trap, cross countries and comparing, for instance, we begin with the date when all these countries on this table achieved $3,000 in terms of per person income. In other words, that we choose the date when all these countries on this chart achieved $3,000 per person. And then we track over time their economic growth. Now the numbers 6, 11, they're the number of years. And for instance, in the case of Korea, for instance, it took almost 40 years to reach the level of $23,000 per $23,000 US dollars income per person. It's taken almost 40 years. At least it has moved from 3,000 to more than 23,000 US dollars in terms of performance per income. So it has been, the growth performance has been spectacular. And that of the Taiwan was equally the eye-catching. But if you look at the other countries, well, in the case of the Peru, it's been more than 56 years since the country attained $3,000. And where they are now, still the per capita income is below 8,000. And the Mexico is about, almost 60 years it has taken for the 70 years after attaining $3,000 per capita income to arrive at per capita income of $13,000. And Brazil is the same, Malaysia, Thailand, Indonesia, and China is the questionable, the country we don't know yet, but then China has a relatively short history. In other words, that since attaining 3,000, it has taken about 10 years to be where it is now. So if you look at it, except for these two countries, most countries, other countries, all these countries are known as emerging economies, important emerging economies. They have fell into a trap and they are not able to move out. So while they are in this trap, how could they be, they could construct important, the polar. They are not able to do so. It's just they're struggling to get out of the trap. And the diagram shows that since World War II, only 13 countries have managed to avoid getting into the trap. And some of the countries like Israel, Taiwan, and South Korea are now classified as other developing economies in the world economy by the IMF, which means that they are not advanced countries, but developed economies, well-developed economies. And only certain countries have been able to avoid getting into the trap. But the important point is that one of those countries was Greece. Now Greece is in the dump, and nobody knows whether that Greece will ever get out of the trap. So that even some of the countries which was able to manage to stay clear of the trap are now struggling again. And even going back to the diagram here, you can imagine that the rate of growth of Taiwan and Korea has begun decelerating again. So now the people are questioning whether even these two countries at the higher level of per capita income, they are in a different kind of trap. In other words, that Korea and Taiwan are also in a trap, but a trap different from the one in which the Indonesia, Thailand, Malaysia, they are now located. So it's a serious question to ask why they are thrown into the trap and whether they will be able to get out of the trap. But because of this, the decline in catching up with the United States and other advanced countries, for instance, right now, the Korea and Taiwan has caught up with about 55 to 60% of U.S. per capita income. Still, they have a long way to go. And the question is, well, if they are in a trap and they are not able to escape the trap, and then they will never be able to catch up with the United States. And if they are not able to catch up with advanced countries, how could they they will be able to play an important role on the global stage? This is the questions. And that's why, well, there is no longer a multipolar world, but if there are polars, there are only two at most, European Union and the United States at most. India and China and Russia, they are militarily powerful, they have nuclear weapons, but then economically, just they are no match to these advanced countries. And then United States sees the opportunity to regain its position as the hegemonic power again, because other countries belonging to the emerging world now are struggling to survive or to move out, get out of the trap, or to resume or to regain their growth dynamism or growth, momentum. So United States now have the strategy which they believe will help regain their unchallenged status in the global economy. What they are doing now? Well, they have proposed two alliances with the Asian countries and European Union members. The first one is known as Trans-Pacific Partnership, TPP. It is a strategy where 12 countries, including the United States, of course, United States, the leading countries, are trying to establish a free trade area. A number of countries in the Asia-Pacific region have joined the TPP, and Japan and Korea are going to join. But then the idea behind the Trans-Pacific Partnership is, to many people, especially to many Chinese, is designed to contain China. In other words, that they're trying to circle the China, excluding China in this partnership. They're trying to leave China out and circle the China so that they could, in a way, contain or restrain, control the economic and political activities of China. In other words, that if China start flexing muscles, and they have been doing that, and then these 12 countries and possibly 15 countries will be able to unite their forces together to make sure that China behaves. Some people believe that this was the major idea behind this TPP, and this was the U.S. strategy, and this was heavily criticized by China for some time. But now, well, China has changed this strategy too. China is now mulling over the idea of participating in this partnership. So I don't know what will happen in the future, but nevertheless, this is one strategy. And then, at the same time, the United States has proposed, and European Union has, in a way, has agreed to negotiate what is known as TTIP. It's the US-EU Transatlantic Trade and Investment Partnership. and if it is it's realized, in other words, that if the European Union and United States agree to partnership, and this is going to be the most important, the partnership, and will be large enough, powerful enough to control the entire world economy and making de facto the most important single hegemonic the power in the global economy. But as of now, the European countries and United States have many problems, trade problems, they will have to resolve, and it will take many years to reach any kind of agreement acceptable to both sides of Atlantic. And what about the TPP? Again, it's a grand idea, but then it's not clear whether a group of so diverse countries, including Brunei is a member of the TPP, Brunei and United States and Canada, Mexico, Australia, New Zealand, I don't know whether they will find a common ground upon which they could construct workable free trade area. So it's questionable, but then nevertheless, the United States has become assertive, once again assertive, and trying to regain its hegemonic power. And this is what we see right now. And we'll have to wait for few more years to see where the world is heading. And then if we know where it is heading, and what would be the environment of that new global world run by the United States and Europe. So I will stop here, and I will take some questions if you have any. Okay. Yes, you first. Why don't you identify yourself, where you're from, at least? You don't look like Korean to me.
I'm not Korean. My name is Amna. I'm a first-semester student. I'm studying Korean studies. I come from the UK.
UK.
Yes. I have a question for you about China and the amount of gold that China is amassing in its reserves. Do you think that they are planning to try and float their own currency as the world reserve currency? If so, do you think it will be backed by gold or hard assets? And if so, what are the implications for global trade?
Well, I have written a couple of papers, the academic papers on that issue, and then I'm still working on the third one so that I can answer you the questions. And certainly, China is trying to elevate the state of the RMB, you know, that RMB is the Chinese currency or yuan is Chinese currency, to the state of the international currency, by which I mean that currency that is widely used for transactions, trade and financial transactions outside of China, and held as a form of wealth. And this is the Chinese ambition, and as the second largest economy, Chinese believe that their currency deserves to have an international status. But then to do so, although they have amassed something like a 3.5 trillion reserves, and it's a very rich country for the economy as a whole, it's not easy to transform a local currency, the country currency, into a global currency, global international currency, because that currency has to be accepted by other countries. In other words, that no matter what China wants, unless other countries don't accept and don't use the RMB, and that's not going to become, the currency is not going to become an international currency. And the major reason why the currency it hasn't become much more widely the circulated international currency is that China's financial markets are completely closed to the foreign investors and foreign savers. So that if you have, and the Chinese RMB is not convertible. In other words, that if you have RMBs, you cannot convert RMBs into dollars or any other major international currency like a UK pound or euro. So there are a long way to go. They'll have to restructure their financial system, make the currency convertible, and the financial, liberalize open financial markets so that the foreigners can move in and move out of the Chinese the financial markets. In other words, that if they have RMBs by exporting goods and services to China, then these holders of RMB should be allowed to invest in Chinese RMB denominated bonds and equities, and they don't allow so far. So because of these restrictions, it will take many years, but given the potential and the strength and the state of the Chinese economy, it's just a matter of time. Someday, within 10 years, China, depending upon it follows what it says that it is going to follow, it will become an important international currency, period. Okay. Yes? The lady. Young woman, not lady, young woman. Yes.
Yes, good evening, sir. Thank you very much for the lecture. And I'm from South Korea.
Okay.
I have another question in Chinese economy that will make some people, mainly Chinese government, argues that slowdown of the economic growth is the natural phase that they are moving from developing economy to advanced economy. And I'd like to hear your opinion on this argument.
I don't think that's the argument the Chinese leaders are subscribing to. In fact, their idea is that unless they grow by something like 7.5% per year, they will not be able to maintain the social as well as economic stability. In other words, that a high rate of growth will continue to allow to keep the high level of employment, thereby minimizing the social frictions that might arise from the large number of unemployed people. And still there are, in fact, large number of unemployed people in the rural areas, so that the 7.5% to them is very important for social stability, cohesion. But then many people argue that, as you believe, China is a huge economy. It's 1.3 billion people living in that vast the area, and such a large economy cannot grow 7.5% every year. It's just impossible. So that Chinese economic growth will go down substantially. But the problem is, well, what will happen to the social economic stability? Nobody knows. And so there is this serious question now that the Chinese leaders will have to resolve. And there are many different views, very pessimistic views and optimistic views as well. Okay. Yes?
Hi, I'm Korean. And I have a question about the Europe. We are in it for quite a long time. Though the talk of the Brexit has kind of gone down a bit, until a few years ago, the Brexit was considered as a real possibility in the European Union, and should it occur, may trigger a domino collapse of the Eurozone project. Hypothetically speaking, if such Brexit had occurred, would you say that the Eurozone would actually have gone into a steady decline by now?
Well, it has declined substantially. It has declined, and many people still believe that Eurozone will break up into a couple of smaller currency using areas, for instance. But then remember that Europeans are very proud, especially the countries belonging to the Eurozone, are very proud of what they have achieved in creating single currency area. They're using euro, single currency. They have spent 50 years to come to where they are now. And their pride and the achievement will not allow them to allow the the currency euro to break up. And now, after many years of suffering from the crisis, this so-called domino effect, starting from the Greece Greece to other countries, now they have agreed to take some the internal, structural, the changes which will increase the unity among these 17 countries. I don't want to get into the details, but the banking union and the fiscal union are the two important pillars which will strengthen the foundation of Eurozone, so that Euro will remain as an important currency, and one way or the other, the Euro will survive. And especially after the resounding the election, the win for Mrs. Merkel, Germany is going to play a much more important role and will become much more much more responsible for the putting together all these the members to keep the euro as a single currency for the 17 countries. In other words, that Mrs. Merkel will have a mandate to play a more important role in unifying 17 member countries. Yes.
I have a question about.
Yes.
I have a question about European economy. How it's gonna affect Korean economy? Like direction, if European economy continues to decline, what role do you think the government of Korea taking when it comes to the influence it has on Korean economy, with specific reference to huge conglomerates such as Samsung and LG?
Well, the European Union has been and will continue to be the largest export market for China. China sends something like 25% of their exports to Europe, and the single most important market. And China has become the single most important market for Korea. So if China's export declines, export to Europe declines, so will Korea's export to Japan. So there is this chain reaction, so that the Korea will not only suffer from decline their export to European Union, but then indirectly from decline of the Chinese export to Europe. So that we will suffer, and we have suffered a great deal. That's why, because of the European the slowdown, economic slowdown, recession, that the Korea's economic growth has also fallen substantially. So that it's important. And what Korea can do, well, I don't know, but there aren't many things that at this time that Korea can do. Just wishing and hoping that the Europeans get their act together to regain their strengths. Yes. Yes. Over there. Yes.
Good evening, sir. My name is Abhineet Raj and I am from India. I have a question regarding proliferation of these regional trading agreements. Sir, how do you see proliferation of so many regional trading agreements as a stumbling block or building block for world economy or world peace security?
Well, the economists are divided on that issue. Many people believe that the stumbling blocks, and in fact the proliferation of these trade agreements and proliferation of economic unities is similar to the spaghetti ball. You know what you have in the spaghetti ball, it's all got mixed up, so that it is very difficult to figure out what's in it and how to eat this spaghetti. So that could be a stumbling block. But then the past experience also suggests that the trade agreements could help revive multilateral trade liberalization integration centered on WTO. So that, again, at this stage it's too early to judge whether they have these that multi-proliferation has contributed or has been detrimental to global world trade liberalizations. Listen, I have to go home too, you know? You have to eat dinner too, so. Huh? I'm not paid for this thing, you know? For this kind of lecture, I used to be paid, but not this time, but then, okay. It's the internal affairs, internal thing. So, I have so many hands up, so, all right. Let's begin with this gentleman here, yes.
Professor Mark, thank you very much for your lecture. I have a two-part question. I was wondering if the financial reforms in the Basel III financial reforms and Dodd-Frank, do you feel like they are sufficient to prevent another speculative financial bubble like in 2008?
Not at all, no, not at all. In fact, Basel III leaves out so many the financial institutions and markets, especially the shadow banking market, which was the source of the financial crisis. And the second problem is that the Basel Agreement, nobody knows whether that agreement can be enforced. In other words, that you may sign to the Basel Agreement, but then you may not practice, you may not follow the agreement. So that there is the enforcement problem, and then many the markets and institutions are not included, so that I don't think the Basel III argument may help, but absolutely no way of preventing future crisis. And in fact, there are many sources of potential sources of financial crisis all over the place, all over the world, and if one breaks out, and nobody knows what would be the consequences. So it's not totally inadequate. Yes. All right. Over there. Yeah.
I'd like to ask some questions about TPP. So Korea, in last years, there was huge debate on the Korea and US FDA, and also recently there were agreement between the China and Korea's FTA agreements. So I'd like to hear your own opinion about Korean government's actions toward FTA.
Well, the policy of Korean government's policy on the FTA is to negotiate and conclude as many FTAs as possible with as many countries as they are willing to negotiate FTA with Korea. Because having concluded successfully US-Korea FTA, Korea is now in any negotiation can be in a driving seat, because Korea has established the most sophisticated, up-to-date the free trade agreement, so that in every negotiations, the other parties will have to conform to the standards we have established in our negotiation with the United States, so that the Korea has become much more comfortable and to some extent confident about negotiating free trade with China, be that Japan or China, any other countries. So now even Korea is negotiating free trade with Vietnam, Australia, New Zealand, and China. Of course, negotiation with China has come a long way and will be concluded within a year or two, so that Korea is very open-minded as far as the FTA policy is concerned. Okay, my friends, this is the end of my, all right.